The reason stock markets are very complex to understand is that there is too much to know. Most people fail in stocks because they jump from one strategy to another and are never able to master the game. But some people do phenomenally well in stocks. They are the millionaires and billionaires who live the envious life that most of us can only dream of. Early in my career, I desperately wanted to be in that club. So, I went to study each one of them to understand what works in stock markets. I distilled the entire process to eliminate as many investing factors as possible. I removed all of them but three, and it worked like magic. So much so that I'm mostly financially independent because I clocked very high returns from small cap stocks using just those three factors. I practiced that one kick 10,000 times to beat the market, and voila, it worked. My process takes up a fraction of time and works almost always in all kinds of markets. So, what are those three most important factors that help me is the stock market game? Let's find out what they are and why they are so important. Let me tell you an interesting story. This story is about Ankush, a middle class boy who just graduated from a low key college and set out to follow his passion. Ankush's grandfather was a star ice cream hawker back in a Maharashtrian village. Each day, his grandfather would prepare the ice cream mix using his secret recipe and freeze the mix in a custom built freezer at home. He will fill up his cart at 6 in the evening and go to his fixed spot in the village market. The ice cream was a hit. People always lined up to get a taste of it. It was unmissable. The raging demand for his ice cream ensured that he returned by 8 in the evening. At home, Ankush's father was uninterested in the ice cream business. However, Ankush was quite fascinated by the entire process. Each day, he would help his grandfather mix ingredients, fill the molds, and place the molds in the freezer to get his grandfather ready. With this association, Ankush learned the entire ice cream making process and he absolutely loved it. But things changed when Ankush's father got a job in Mumbai city and Ankush, along with his mother, moved with him to the city. His grandfather was happy that now Ankush would get a better life, a better education, and will be exposed to more opportunities. Not long after Ankush's grandfather passed away, the ice cream business got shut. Ankush was heartbroken by his grandfather's demise. The closure of the ice cream business hit him even more as there was no one to continue his grandfather's great legacy. The time passed and Ankush got quite entrenched in the city life. He got into a new school, made new friends, experienced new things, and got into new routines. But his love for ice cream remained strong. He will experiment with new flavors at home, change the recipes, add or reduce sweetness, try sugar-free variants, and whatnot. He did everything. He was so engrossed in the ice cream that his friends complained that he smelled like vanilla chocolate and kesar badam all the time. As he completed school, Ankush couldn't let go his fascination with ice cream. So, right after school, against his father's will, he set up an ice cream shop in his locality. He remembered his grandfather's secret recipe and put all he knew to work in this ice cream shop. It was an instant hit. People in the locality became fans. Soon the word spread about the delicious ice cream and people from far off areas started flocking to the store. The streets often got clogged because customers parked their cars on the side, narrowing the lanes. The food delivery apps threw an order every minute. Weekends were packed till midnight. It was absolutely insane. However, Ankush was overwhelmed by the unprecedented success. The momentum was much more than he expected or planned for. The store got overburdened. There was not enough capacity to accommodate orders. Unfulfilled orders piled up, lead time shot up. Most importantly, as Ankush was not able to devote the required time to the production process, the quality of the ice creams suffered. Therefore, Ankush had to slow down. He brought the business down to a manageable level, but he had to be quite involved in functions at the store. His bandwidth was clearly limited, so was the potential of his business. He was still making good money from the store though. He clocked a revenue of 50 lakh rupees last year and a net profit of 10 lakh rupees. But he was not content. The desire to take his grandfather's legacy to the world was alive and kicking, but he wasn't sure how to do it. He wanted to expand, but did not have enough money to set up more stores. He also wasn't sure how he would manage multiple shops. Like any neighborhood store, Ankush's business was also mostly a one-person show with few standardized systems and processes. It was overwhelming managing the business. One day, when Ankush was at the cash counter, a customer shouted his name in excitement. Shocked, Ankush looked up and found his school girlfriend, Ridhima, dipping a spoon in the ice cream she just bought from his store. Excited and thrilled, Ankush deputed his store manager at the counter and left for a drive with his second love. First, of course, was ice cream. On the drive, they talked about how they broke up because Ridhima was fed up with Ankush's absence on dates as he was experimenting with ice cream flavors at home. They laughed hard when Ridhima asked who would want a boyfriend who smelled like vanilla most of the time. As the conversation steered, Ridhima told him that she had joined an investment banking firm and knew a thing or two about business. And they hit it off from there, and Ankush told her how he wanted to expand, but he didn't have the money and management know-how for the expansion of his business. He told her how he had the perfect product, which was selling like hotcakes, and all he needed to do was to replicate the success of his one store. Ridhima saw the perfect opportunity and offered to invest in Ankush's business with some help on the management side. She offered to buy a 25% share in the ice cream business for 50 lakh rupees. Intrigued, Ankush asked whether he was getting a good or a bad deal. Ridhima explained to him that she had valued Ankush's entire company at 20 times the annual net profit of 10 lakh rupees, which comes out to 2 crore rupees. She's offering 50 lakhs for her 25% share. He can open two stores with that money, and Ridhima will help set up tech systems and hire more people for smooth management of operations. She also told him to shift production to one central facility and use stores only as sales point to bring production efficiency and uniformity in quality of the ice creams. She also told him that the valuation multiple she has offered him is 20x, which is low because the business is currently a one-man show and the growth from the store has plateaued. She added that once the business starts growing, outside investors may offer a better valuation multiple. The conversation ended after Ankush asked for some time to think, and Ridhima almost got suffocated from the butterscotch scent from Ankush. After some deliberations, they signed the deal and Ankush got to work. He identified two new locations, ordered equipment, rented a place for manufacturing in bulk, and hired refrigerated vans for transportation. Fast forward a year, and Ankush's three shops are clocking extraordinary business. The turnover has gone up to 3 crores and profit to 50 lakh rupees. The business is managed like clockwork with few hiccups. Ankush has more time for planning and strategy. He is thinking of flowing the profits from the business back into the business and opening more stores. His vision is now to take the business national and open more stores across the country. He is now hungry for growth. One day, while driving to the office, his phone rang. It was Ridhima on the other side. Sad and crying, she called to tell him that she is in financial trouble as she lost a lot of money in options trading. She said if you could find an investor to buy her share in the ice cream company, she could use the money to pay off her father, who has footed all the trading bills. Lucky for her, Ankush was already talking to investors to get money for expansion. One of the investors offered to value his company at 40 times profit because Ankush now had a proven, growing, and scalable business. At 50 lakh profit and 40 times valuation multiple, the business is now valued at 20 crores, which is 10 times its valuation 3 years ago. The investor agrees to buy Ridhima's share and put another 2 crore rupees in business to control a 35% share in the company. Ridhima gets 5 crore rupees, which is 10 times the money she put in Ankush's ice cream business, and Ankush gets money he needs for rapid expansion of his business. That's a happy story, right? The three key factors I look for in stocks are right there in the story. Ridhima was a smart investor. She knew the investing math, and I can't say that about her trading skills though. She rightly understood that a growing business would drive its increased value from two factors: the profit the company is clocking and the multiple it is getting for valuation. In the story, the profits grew 5 times from 10 to 50 lakhs and the valuation multiple doubled from 20 to 40 times. Hence, the overall money invested grew 10 times. Therefore, when I go looking for companies to put my money in, I look for very high growth. My starting point is 75% growth in the company's operating profits in a given quarter. And when earnings grow at that pace, the valuation multiples also balloon. The third factor that Ridhima looked for was the quality of the promoter. She trusted Ankush with his skill set and honesty. There was also no debt involved before she invested, and they started the partnership on a very clean slate. In my case, I do the basic hygiene checks such as how much does the promoter hold in the company, how much debt they have, and how have they grown over time. I screen for such companies every quarter and usually apply more filters to narrow the list down to 8 to 10 stocks. The system works like a charm. For example, one of the stocks that I picked back in 2022 was Neuland Laboratories. The company posted close to 100% profit growth in September 2022 quarter when it blipped on my radar. The price then was near 2000 rupees and now it is closer to 15,000 rupees. That's a 6.5 times return in 2 years. The company's profits have more than doubled and the valuation multiples have more than tripled, leading to such multi-bagger gains. There were several other companies that gave such huge returns after they came into my radar because of their explosive 75% plus growth in a quarter. There was Apar Industries, which went up 7.5 times, Silchar Technologies 40 times, Safari Industries 3 times, Shakti Pumps 2 times, and several others. The strategy is to pick these companies right when they enter the explosive growth stage, ride them through the growth, and it kind of works in all kinds of markets, no matter bull, bear, or corrective markets. Now you know what to look for to stand out in stock markets. Now, the next step is to figure out how to look for it. And that's the next thing I'm going to cover in my coming videos. If you like the video, please hit the like button and subscribe to the channel for more such content on stock markets, investing, and personal finance. Thanks for watching and stay sharp.